If you've been watching the Calgary real estate market lately, you'll notice something important. It's not one market, it's 4 different markets moving at different speeds. And understanding that is what helps you make better decisions. So let's start with detached homes. This is one of the tightest segments of the Calgary real estate market. There were 982 sales in March with just over 2 months of supply. That tells us demand is still relatively strong to what's available. Prices are holding relatively well. The benchmark price is sitting around $741,000, slightly down from last year's peak, but still showing resilience, especially with the West End and the South Center city districts. So if you're in this category, you're in a relatively strong position. Now let's move to detached homes. This segment is more balanced. Sales and inventory are both tracking close to long-term averages, and prices are sitting around $686,000. That's just slightly off of last year's pace. And what that means is less volatility. So you're seeing the same pressure, or not as much pressure as detached homes, but certainly less than condos. Next, row homes or townhomes. This is where we start to see a shift. Inventory has climbed to about 3 months of supply, and sales are down roughly over 19% over last year. Prices are sitting around $423,000. That's down from 6%. So here buyers have more options. More choices means more negotiation. And finally, apartments. This is the most buyer-favored segment right now. Inventory is near record levels, nearly 5 months of supply. Sales have slowed and prices are under pressure. The benchmark price is about $300,000. That's down 9% from last year. So if you're a buyer, this is where you'll find the most opportunity. And if you're a seller, strategy matters a lot more. So what does this mean overall? Well, according to the Calgary Real Estate Board and Chief Economist Anne-Marie Laurie, the market is technically balanced. But that only shows up when you average everything together. So in reality, detached, tighter, more competitive. Semi-detached, stable. Townhomes, softening. And apartments, well, that's a buyer's market. So let's talk about the surrounding towns, because this is where things get really interesting. Airdrie is sitting at a relatively balanced position. About 3 months of supply with prices around $512,000. But prices are down about 5% year over year. Chelsea, can you concur? More options in Airdrie means buyers have more leverage. Cochrane is also balanced but trending slightly softer. Inventory is rising, steady sales, and prices are around $561,000. That's about 4% lower than last year. So again, more choices, patience for buyers. Okotoks, that's the outlier. Inventory is still relatively tight, just over 2 months of supply. Prices are holding better here, sitting around $618,000. Still slightly below last year, but showing some upward movement compared to late 2025. So what's the big takeaway? Well, there is no longer one direction, no bands like that. It's segmented. And the strategy, whether you're buying or selling, depends entirely on the property type and location. If you want to know where your home fits in today's market or what opportunities exist on the buyer side, send me a message and I'll walk you through it.